the trend is your friend. The reason it's a famous saying is because you want to be trading with the direction of the market, and usually the best way to identify that is trend. There's going to be several categories that we can utilize to start to understand intent in the market, control in the market, and direction in the market. So join me in this workshop where I'll look at a multi-dimensional approach combining points of interest, inducements, volatility, momentum, time of day, lower time frame confirmations, and other categories of control and intent in the market. And it all begins with me understanding the directional bias of the session and the day, which is exactly what we're going to reveal today. But before we get into it, why should you even listen to me? Well, I've been trading in the markets for almost a decade now, and I've had a very similar journey to you, where I started off watching every YouTube video, every ebook and PDF. The more information I had, the more strategies I learned, from Elliott wave to Wyckoff theory to market structure. More information did not arm me or empower me. In fact, it left me with confusion and analysis paralysis. But 3 years after that point, I made $1 million in profit from the markets in the space of 5 years of trading, and now approaching my 10th year in the market. I made multiple millions of dollars from trading, and on this channel for the last 2 years, I've been showcasing and documenting a MyFX book, showcasing a broker sync journal, and most importantly, something that cannot be faked, is I've been calling the market live ahead of time for 19 months now, with my exact entry, stop loss, take profit level, and explanation, a 59.5% gain. So let's get into it. How to find control and direction in the markets. Control and direction will help us understand where is the high probability movements, because the moment you know where the market is going for the session or the day, it becomes a lot easier to just find entries knowing you are with the trend, with the momentum, with the volatility. So the old way, how most people do it, is going to start off with market structure. Now, market structure is absolutely great. It's going to help you understand trend from the guides that you've seen me do. Multiple videos going into depth from 30 minutes to 1 hour, masterclass style, workshop style, guide style, seminars, and a full series on how to really understand market structure. Make sure you go find it on this channel. A very detailed and advanced concept worthwhile mastering. So it is a good foundation. I'll give it a positive, and that heavily interlinks with trend. When you start to understand market structure, you'll start to understand where is a probable trend. Now, it can get complicated because when you start to do multi-time frame trend, you'll start to see that on the daily time frame you're like this, but then you might have portions where it's going to be bearish, and inside those bearish portions you might have a bullish sequence. So when you look at it, you might see higher highs and higher lows, but then you zoom in and you say, oh wait, I'm seeing lower highs and lower lows. And then you might get caught up saying, no, I do see higher highs and higher lows. And in the end, you should have been selling to this demand area. You're looking for a higher high. So it can get complicated because multi-time frame trends have different information. So it's hard to know which time frame to give weight to, pay attention to, especially when you have multiple points of interest. You'll start to realize you can have multiple trends, multiple points of interest, multiple support and resistance, and it can get quite overwhelming, which is why it's not always leading to absolute consistent results. Sometimes great, sometimes accurate, but sometimes confusing. And that bursts the main problem where top-down analysis, something that we are taught as the thing to do. Start off on the daily or the weekly and work your way down. Spend time on the higher time frames. But let me ask you, how important is the monthly time frame for today's London session? Unless you are in a monthly demand area and you know it's a clear bullish trend, then maybe you have some information. But to be honest, to really know where today is going, you should look at the lower time frames and then know how to connect it to the higher time frames. And of course, points of interest are preferred places to be trading, but then often the market is in no man's land, in between points of interest. What do you do then? How do you find control then? Or even inside a point of interest that is 40 pips large, you might have bearish moments in the demand area, and then you get a bullish moment, think that we're in demand, we are bullish, I need to buy, not knowing that this was a inducement, enticing in early buyers only to get swept out. So there is still problems, and the problem is with points of interest. As you may remember from the full guide that I made on points of interest, you have weak points of interest, strong points of interest, preferred points of interest, trap points of interest. So if you don't know how to differentiate them, you'll also get lost very easily. And then obviously a very common thing to do is connect it with support and resistance. Not only the support and resistance levels, but Fibonacci can be a support or resistance, trend lines can be a level of support or resistance, EMAs. So there's multiple ways to categorize this, and this is how people usually connect things, where they'll take a market structure and trend read and say, okay, this is where I need to be trading. They'll come into one of their points of interest and say, I need to trade in this direction in this way. And then they'll use support and resistance to make the key levels, and they'll look for lower time frame trends to execute upon. Something okay, but the problem is it does lead to a lot of frustrations where it can be accurate sometimes, so this is good, but it can still be confusing and frustrating because you have winning periods. You might have a couple of banging trades and you nailed it, you got the direction, you got the trend, and it was a very explosive move in your direction. perfect. But then you had back to back losses, and you're left thinking, why? I'm still doing the same things where my win rate is sometimes 40%, sometimes 70%. Why do I have a fluctuating win rate? Why do I have big wins and so many losses after that? Why do I not understand my losses? This is a big one. And you'll realize that you get into a lot of trades because you're in a point of interest. You might even get profit, but then it keeps reversing on you. You keep hitting break even, or you keep seeing profit and then reversing on you, and you don't really know why. It's because you didn't understand control or intent. So the problems that you're going to face is you'll have a few big wins and then back-to-back losses, and you are easily a victim to manipulations because you're getting a lot of reversals and break-even trades with an average win rate, leaving you frustrated, confused, and this can very easily spiral into tilt, a losing streak, and a lot of psychological problems and bad habits forming. So you're probably looking at this and thinking, yes, damn, Wakar, you got it right. My equity curve on prop firms looks just like this, where when I get the trend right, I get a huge winning trade, and then I get loss after loss after loss, and then I get another banger, and then I get some small wins, break-even trades, some losses, more losses, a nice win, a big win, and then back-to-back losses, 6, 7, 8, 10 losses in a row, and then one big win to try and recover it, but then you size down because you're in a losing period, you take half the risk, so this big trade actually cuts off over here, and in the end, you look back and you're like, oh, my equity curve is not up, it's not down, it's break even. So you end up seeing yourself as a break even trader. You might not be a losing trader, which is good. This is a very important step, but you're not going to thrive in this area. You're not going to get consistent profit and payouts. You're not going to be able to transition to a full-time trader. And to be honest, this will feed a lot of gambling problems because you'll just be waiting for that next high. You'll be chasing that next dopamine hit because, you know, after 5, 6, 7 losses, a big win sometimes comes. And this becomes like a drug. You get hooked onto the big win. And then with all the psychology warping you of risk management, wrong profit taking systems because you cap your winning trades too early, you let your losers run too far, it becomes a mess very easily, and it all starts with not understanding correct directional bias. So this is where we need to understand, how do you find direction and control in the markets for today? So that when you come to the market, you know exactly where it's going, and you just need to find quality entries with good win rate and good risk reward. There is more to it. Market structure is good. It builds a nice foundation, but it still leads to these problems and overall a break-even trader. Now let's transition to how it can be, how it should be, and how it is exactly for me and all of the traders that I work with. So let me introduce to you the new way that really helps you from a multi-dimensional approach understand control, because trend is a good indication of control, but it's not the only indication of control, and at times it can be misleading, leading to the losses and frustrations. So when you combine the other factors with market structure, not making market structure the holy grail and trend the holy grail, rather it becomes a portion with other things connecting to it to together formulate a high conviction play of where direction for today needs to be. So of course it starts off with market structure, and when you connect market structure, this great foundation with inducements, wow, that's when you start to understand control is actually from inducements. Inducements and liquidity are the oxygen of the market. When you combine it with trend, you're really seeing things with so much clarity, but you realize you can actually get A+ high quality setups against the trend. You can buy in a supply zone or sell in a demand area. In a bullish market, you can sell with more conviction and a higher win rates than just trading with the trend. Catching the whole move is not the goal, because if you're a trend trader, you're looking for a bullish market, you're looking to buy at the low and get rid of the trade at the high. You're looking for the whole portion. Whereas a profitable trader, a restricted trader, they're looking for the most probable portion. They're not going from low to high trying to catch the entire swing move. They're looking for quality portions where they get the same risk to reward. Instant feedback, better for your psychology, because you're not caught in a trade for 3 weeks and it's chopping around, reversing on you, profit, reversing. That ride, that roller coaster of swing trading and trend trading can be impactful. It can be problematic. But if you're trading in and out, your break even within 3 minutes, your TP1 within 10 minutes, how many case studies have I shown you with a track record? In fact, how many of my public signals have you taken with me or watched and seen that I took a trade, I was break even within 5 minutes, I was out of the markets, walked away with 3% profit within 1 hour. I didn't catch the whole move. I caught a same risk reward in a high probability portion because I understood the inducement. Go watch the guides, please. This channel is here for you as a resource. So you can start to see the inducement guides, the liquidity guides, the case studies, the market structure guides, connecting it together with the downside with price price action series, just look at the playlist in the description. Everything is there for you. Don't waste time. After this video, watch the next one and bring everything together. You will change your trading. Next, of course, is understanding time, because there is better times to be trading in the market and worse times. If you know when the market is likely to move, when the volatility comes in, when the liquidity comes in, when the manipulations are, so you know when not to trade, when are the low probability moments, you can start to now own in on the right time, because you're looking for control and direction, and control and direction usually happens at the same time. So if you're looking at the right time, you're following market structure, you're avoiding traps, or you're using traps to your advantage, even better, because now you have time, traps, inducements, market structure. You're layering things together to have so much probability, and then you start to understand control, because leading into your entry, you'll start to see where is the volatility, where is the momentum, what is the context. Because if you watch my Asia range video where I taught you how to read Asia range on the M1 time frame to build a case study and framework for the day. So when you approach the London session based on Asia range, you know what's going to happen. You see the liquidity, you'll see the traps, you'll see the control, you'll see the liquidity and structure cycles in Asia range to know where is the directional bias going to be for that day. That's why we call it daily cycle variations, and it all starts with Asia range. So you need to know the context from Asia. You need to know the momentum and control and the lower time frame confirmations on M1 to really understand when the inducements are ready. The law of cause and effect, if you remember from the inducement guide, when I pull back an elastic band and I let go, I expect it to fire, because it'd be weird if I pulled it back all this way, I let go and it just dropped. When you have inducements, you have the pullback, that is the inducement. When you let go, you expect the reaction. This is the power of inducements, and it can be with trend or without trend, but when it's with trend, it's even better. But when you layer this in with time, with traps, with trend, with points of interest, and then you add in the domino effect where one inducement leads to another, leads to another, leads to another. You might be seeing a bullish market and you see these higher highs and higher lows, and I might be seeing that I'm seeing build up, inducement, push down, build up, inducement, push down, build up, inducement, push down. So even though the market is bullish from higher low to higher high, this build up and inducement, build up and inducement, build up and inducement, plus bearish, bearish, bearish. This is showing me I need to keep selling until I see an inducement the other way. And then when I see a build up inducement the other way, that's when I know I can look to buy once again. The domino effect of inducements tells me control despite what trend says, or with trend, depending on the inducements. So when you combine these things together, the results you will feel is you will have an increased win rate. 60 to 80% is more than achievable. It's comfortable. We can just call it home. If you want to get 85% win rate, then that becomes a bit of a challenge to consistently do it. And even dipping below 60%, if you want a 50% or 40% win rate, it is a tool. You can use that to your advantage. Just take a look at my public signals, because I started off with A+ setups. I started off with 80% win rate for my first 15 trades when I started to build the profit buffer. And when I reached a 15 to 20% profit buffer on the account, then I thought, okay, let me strategically lower my win rate to go from 80% all the way down to 60%. And then at the 60% win rate, when I reached a 40% profit buffer on the account, I thought, okay, now to really get exponential, now I can really start to grow this account quick because I've got 40% of profit. So then I lowered my win rate from 60 down to 50, down to 40, strategically introducing with my A+ setups, B+, C+ setups, counter trend setups, hedge setups, non-POI setups, and I started to connect this together as a portfolio. But the whole point here is it is in your control. You know what you're doing, that you are empowered, and you can keep your win rate at a high level, 60 to 80% win rate. Over the last 18 months, my personal win rate on my public track record, I've averaged a 60% win rate for a year and a half with an average gain of 3.5% per month. Now, think about it. If you had $1 million in funding, which is what we specialize in inside our community, $1 million in funding and 3% a month, you are walking away with more than a neurosurgeon or top lawyer salary. This is life-changing money, and it's with a stable win rate, a stable risk to reward, a stable trade frequency, a consistent psychology, and absolute control on your portfolio, leading to consistent gains like I've showcased. And even though 3 or 4% per month, it does not break headlines, it does not break necks, it is not clickbait, it is not exciting, but it's consistent, reliable, and life-changing because you allow the capital, your account size, the prop firms to do the heavy lifting. $1 million, 2 or 3% per month, you've changed your life. And the main thing is it's really easy in your psychology because you have tap and go entries. You have price taps your entry and either hit stop loss within 5 minutes or your break even within 5 minutes. Absolute peace. And then within usually 15 minutes, you have your first 1 to 3 risk reward take profit level. A really quick feedback loop, very easy to pay for your next loss, and you don't have to be right. You can make profit when you're wrong in the market. So in the end, it becomes a lot easier and it becomes consistent gains. And in the end, you will be a profitable trader where you not only see an overall upward upwards trajectory. You allow the high risk reward trades to do the heavy lifting, and you'll have a lot of break-even trades. That's fine, because that's built into the system. You will have periods of small wins, but overall you are gaining 3 to 5% per month, and that can really change your life. Now, before I break down in detail each one of these things, I want to remind you, inside of WWA Trading, we have a vibrant community focused on $1 million in funding, where not only do we give you information, but what I truly believe is needed for absolute profitability, implementation, practice. And within that, inside WWA, we've created an environment for application and implementation, which is why you'll have a one-on-one coach. Not only that, live streams twice a day, every single day, an AI built platform where you can search for topics on all of my content library, hundreds of hours, all of the videos are there. And if you're still confused, you could talk to me on a Zoom call, ask me a Q&A. This is truly an environment for success where we've had so many people thrive and reach their trading goals. This is a no-brainer community, but the problem is it's invite only. Because we do one-on-ones, we cannot invite in thousands of traders, which is why we end up only accepting a handful of people based on who we see has real potential to thrive inside of our community. So if you are interested, click the link in the description and fill out the application process with detail. And best case scenario, you become a full-time trader, $1 million in funding. Worst case scenario, we leave you better than we found you with some free gifts. But let's break it down together so you can see how to connect to build your directional bias for the day. So first of all is going to be market structure. And market structure very easily is just trend. Now, when we talk about trend, we've already made case studies on the idea that you have multi-time frame trend where you have external structure and internal structure that builds internal trends and external trends, where you have higher low, higher high, higher low, higher high. You have a bullish trend, but inside of that, you have bullish internal trends, but then you have bearish internal trends where you have this higher low that made an internal higher high, makes an internal lower low, internal lower high, internal lower low. So you can have a bullish market with bearish portions. If you were to zoom in further, you might see bullish portions, bearish portions. That's where trend can get interesting. So you need to learn and go watch the market structure video where I break down how to navigate points of interest, trap points of interest, weak points of interest. Once you've qualified that, overall trend analysis, internal structure, external structure, and connecting all together. But the main premise is once you found a high in the market that makes a higher low, goes on to make a higher high, you've established now an external range where that external high and external low, you also find a build-up and inducement, and then the new higher high made. So with your external highs and external lows, you've also found trend and you've also found inducement leading to that trend. So you're connecting things. And then you start to do the points of interest and you say, okay, this was the high in the market. This is my break of structure point. Who broke the structure? And you realize, oh, it's this demand area. This one or the inducement one. So you have two demand areas. We have a decisional and you have extreme. And then you're starting to connect good trend analysis with good points of interest analysis with inducements. So you're connecting things correctly. And then you start to learn how to qualify these zones. If I'm to look inside each one of these zones, I'll see that there's two types. And look at the points of interest video that I spoke about, because you can have a point of interest where on the higher time frame, it goes like this. And on the other one, it goes like this. So you see, oh, price went bearish, then went bullish. But when you read closely, you'll start to realize some of these points of interest on a lower time frame look like this: bearish and then bullish. These ones are not good. Whereas the other one where it looks the same, you went from low to high, you realize inside of that on the lower time frame, you had a build up, you had a inducement, and then you had a strong reaction. This one equals a good one. So then you start to read the lower time frame of the points of interest and you say, okay, inside of here, I have the inducement inside of my points of interest. So now I start to read my complex pullback where I have 1, 2. I've now established internal high. Once I've established my internal highs and internal lows, I see that this complex pullback is happening. Watch the video on it. So now I know direction is bearish until the complex pullback is complete with the efficiency of the pullback, the structure cycle, arriving to my refined decisional, which had an inducement, led to a higher high. Inside of this area, now this is where the action begins. Because if I've got POI, I've got trend, I've got refined points of interest, inducement, control, context. Now when we arrive into that decisional point of interest, that might be a 40 pip range. And then you see the inducement on M5 is actually this lower portion. So now you refine your points of interest to the inducement. And then you see the day prior when price is doing this complex pullback, which is bearish, lower highs and lower lows, you start to see not only is it forming lower highs and lower lows, you're getting build up, inducement lower, build up, inducement lower. So you're starting to see the sellers are actually in control. And then price goes towards the Asia range. And in the Asia range, you start to see some interesting things. And inside of that Asia range, you do a Asia range high and you do an Asia range low. And then you've got your Asia range box. But when you zoom in and watch the Asia range video, you start to see we had build up, inducement, push out, mitigation. So the buyers are in control. And then after this, equal highs, build up, sellers are in control, and then no inducement, no inducement, no inducement. We built a very clear trend line. This is indicating trap. So we saw early buyers getting taken out, trend line liquidity formed. This is giving me information in Asia range. And then price opens up for Frankfurt open, and you see prices shooting up and then shoots down. This is showing me these equal lows sweep into my early demand area, the top of my demand area. Buyers are getting interested. Smart money traders are getting interested. They're seeing this smart money sweep zone, and then price comes into it. London open hits, price shoots up. So price is ready to buy potentially. And then when you see that price shoots lower and you're thinking, whoa, what happened here? Context, story. So now I'm starting to see I have trend line liquidity to target. I have Asia high to target and the refined demand area found. Now I have in my time window, London open, a inducement of not just Asia low, also smart money trap. And then inside of here, if I get my two-leg protocol, my entry confirmation in the key time window, I can start to target these trend line liquidity, target Asia high liquidity, and overall trade the trend because we are inside a decisional, which was refined, looking for the next higher high. I just trade the profitable portion, not the whole move. So when you zoom out, everything connected together. I did go through it quickly, so I want you to watch the guides on this channel, but you're connecting your market structure with inducements, with time, with traps, with volatility, momentum, context, and lower time frame confirmations and control. When you connect all of this together, you have such strong way to view the markets. In fact, a recent video where I break down in a single month how I made $92,000 in 2 trades, and they were both A+ setups. And with conservative risk, how I was able to walk away with almost a 6-figure month with verified profits simply by following this strong understanding of directional bias, intent, volatility, control, because I'm trading at the right time, in the right way, with the right confirmation. This is the trinity I always speak about: time, lower time frame confirmations, and inducements. Make sure you watch the playlist on this channel to really dive deep into all of these topics so you can connect it together, so you are increasing your profitability through understanding and clarity. And by now, you already know for all of this to work, you need to be restricted and follow the rules. Why? Because a restricted trader is a profitable trader.